Welcome back. Well, the markets are doing quite well, but let's focus on a couple of other companies. Best Agrolife, well, that company is the one on our radar. They've launched a couple of new products, and they've also given an elaborate guidance for the coming year. To understand how they're going to go about their business, we're joined by Mr. Sanjeev Kharbanda, the Chief Financial Officer of the company. Hi, sir. Good morning. Thanks so much for joining in, Mr. Kharbanda. Give us a few details. Q4 actually was a washout. The street was very, very disappointed on that aspect. But you're still guiding that this year will be far better. So you're guiding for a top-line growth of close to around 30% with margins that should be in the vicinity of around 20%, which is okay. We'll take that. Do you stick to that guidance given the kind of price correction we've seen across the board? That's point number one. And also Ronfen. That's one of your key products, right? For this year, you had guided, I think when you joined on the show, 350 to 400 crores. You ended up a far cry away from what you set out. What's the target this year?
Hi, good morning. So before we come to the numbers, first of all, let me, thanks for this opportunity. And through your channel, I wish to express our gratitude towards the investor as well as our consumer. Now, in terms of, the business performance, the point one which you picked up, the last quarter of FY23 was a washout. But please understand, last quarter of FY23 washout was only for a generic molecule, the commoditized part of the business. Yes, of course, just like other agrochemical companies, and because of the overdumping by China, we were also affected. But fact of the matter is, if you look at our annual number, see, any company, any organization cannot be simply judged based on one quarter performance or second quarter performance, because the seasonality also plays an important role. You would appreciate the annual number of Best Agro, which are 1746 crore in terms of top line, which itself is a 44% growth. Last year also our guidance was in the range of 30%. However, we actually, delivered more than the expectation, and we have delivered 44% growth on the top line in the annual number. It is pertinent to mention, it is not just the top line. The EBITDA margin is also.
Yeah, Mr. Kharbanda, what's done is done. We want to know the way ahead now. You're sounding confident.
Sure.
So if I go by the 30% guidance, you'll be in the vicinity of around 2,250 crores for this year.
Absolutely.
So do you stick to that with margins of around 20%? And yet again, I'm asking you about Ronfen, which was supposed to grow big time. What will it contribute to this pie of 2,250 crores? Please go ahead.
Yeah. Certainly, the guidance which we have given 30% growth, even on this base, we are confident, and we have very clearly identical building blocks which will help us delivering this number. And in terms of Ronfen, last year, mid of the year only we launched. The product acceptance, product stability has been proven. Moreover, it is important to recognize the Ronfen supports largely the Kharif season. So it should not be simply looked at what happened in Q4. So Ronfen, apart from Ronfen, CTP are done very well. Ronfen numbers for the year 23-24 should definitely cross 400 crore for a year. Apart from that, why I'm saying that we are still confident and, we stick to our 30% revenue growth this year with 18-20% plus margin is because we have the new product pipeline, very healthy product pipeline. Just a couple of days back also, you would have noticed we have launched one product, Tricolor.
Right.
We are the first agrochemical company in India to have this kind of three-way combination, the unique combination.
Mr. Kharbanda, so you said in the conference call, and this is, uploaded on the exchanges, that Ronfen can do 500 crores in FY24 and CTPR can do 400 crores. You stick to those numbers, right?
We stick to these numbers, but at the end of the day, a little bit plus minus on the number. Ronfen can even cross that number. That's absolutely,
So Ronfen is 400 or 500 crores for this year? Just want to clear the air, sir. We don't want to leave any kind of any grey area. So that's why me and Manglam want to know. Is it 400 or 500 crores? And we'll hold you to that number the next time you join as well. So please tell us.
Certainly, we are hopeful Ronfen should touch close to 500 crores this year.
Okay. All right. And CTPR, you're saying 400 crores?
Okay. So, that's as far as the guidance on your...
You also need to understand, please understand, Ronfen and CTPR put together in domestic market itself is a 10,000 crore market. So what we are also saying, over a period of time, we want to gain 15-20% market share of these products. So, it is not simply just, in 1 year, what is the number? Of course, we stick to what we said, but market share, gaining market share is the parameter one should also look at.
All right. You want 15 to 20% of the market, which is close to around 10,000 crores. So 1,500 to 2,000 crores. By when is that happening, sir?
I'm saying in 3 to 5 years.
In 3 to
window,
5 years.
Last year only we launched these products. So in 3 to 5 years window, we are hopeful to capture 15 to 20% market share of this product.
Mr. Kharbanda, all is well with the income statement that you're projecting 30% revenue growth, 20% margins, key products doing extremely well, your market share. But the parameter that the street looks at is cash flows. And, over the last 5 years, your operating cash flows have been negative 4 out of the 5 years. And the 1 year it was positive, it was a positive mere 13 odd crores. Looks like your business has been funded by borrowings, because in 2017, your net debt was zero. Now it's close to around 550 plus crores. Is this sustainable? That's the one thing we need to know. Will your cash flows turn positive at any given point in time or not? Inventories of 700 odd crores as well. Balance sheet, that's where a lot of problems are. I mean, how do you address those issues?
With full responsibility, let me put it very clear to you. Yes, there has been pressure on cash flow, but please understand, even when you are saying the borrowing has gone up, but the borrowing has gone up only on the working capital side. If you look at truly, the long-term debt, we have a very healthy leverage. We have hardly any long-term debt on the balance sheet. Yes, when an organization is in a growing phase, and you would also appreciate just a couple of years back, company has started its B2C channel. When you start the B2C channel, which means you are reaching up to the last mile consumer, your farmer, you need to have a high inventory in pipeline, not just the raw material and packing material. You need to have a FG pipeline also very strong, so that your distribution
100 crores of inventory, Mr. Kharbanda. 700 crores of inventory. That's nearly 200 days of inventory. You said you have to manage high inventory. What is a normalized level here? Working capital is a problem. Your cash flow is turning negative because of that. So your business being funded by borrowings, not sustainable, right?
Mr. Kharbanda, let's make it simple. Will your cash flows turn positive this year? And tell us, what is the steady state working capital days that we're looking at? Let's leave us with these two, because it seems the issue the street has is on these two parameters.
Absolutely. The operating cash flow is going to turn positive this year, FY23-24 itself, because to convert that, what we have done, we have invested on the backward integration so that we can reduce our inventory pipeline and we can improvise our cash conversion cycle. So see, cash conversion cycle, yes, which has gone 100 days plus, it is a cause of concern, but at the same time, we are confident, we are very clear the conscious steps company is taking, and FY23-24, we are hopeful the operating cash flow will be positive, and here onwards, operating cash flow would be really, really healthy.
All right, and inventory days will be okay. Working capital days, what are you targeting? And cash flow, how much will you generate this year on 20% EBITDA margins?
See, cash flow generation even today is healthy, but the point is investing cash flow is going. Working capital blockage is happening. So what we are targeting is, the DSO. Of course, DSO would be largely led with the market trend, with the, industry trend itself, but we are going to cut down the inventory days big time. So that
what is big time, sir? What is big time? The street wants numbers. And when you say cash flow is healthy, we don't see that in the numbers, because 180 crore is a negative cash flow. Inventory days will come down to how much, and how much cash will you generate this year?
Inventory days would come down to 45 to 50 days.
Okay.
Over a period of time.
And the cash that you will generate this year will be how much? The cash that you will generate from operations, how much will that be?
See, I would prefer to make a statement on cash flow that we will convert from a negative operating cash flow to a positive operating cash flow. And the number, it is too early to comment on, because these are the two, peak season. Q1 and Q2 are the peak season for our products.
Yeah.
So I would like to say that operating cash flow would be positive for sure.
Okay. Got it.
However, exact numbers, let numbers speak after the two quarters.
Yes, we'll wait by, because numbers speak louder than anything else. But working capital days, what will it be? Inventory days, I think, comes down to 45 days. Working capital days, that will be receivables, payables, as well as inventory, put it together. What can that come down to?
Yeah, overall, the cash conversion cycle working capital should come down by at least 20 percentage points.
In number of days, what would it be?
Number of days we are targeting should be under 80 days, which has already crossed 100 plus.
All right. Okay. All right. Thanks so much for stopping by. Some clarifications coming in there. We'll have to wait by for delivery of these numbers. Looking forward to positive operating cash flows this year, and also the working capital cycle getting narrower than what it is. Yes.
You know, basis the numbers that he's guided for, 20% margins on 30% revenue growth, the EBITDA next year could be around 450 crores. The important part is how much of that generates into cash flow. Currently, the negative cash flow is 180 crores. Even if he turns positive, it would be, you know, a delta of 180 odd crores. So the big question is, how much of the 450 crore EBITDA that is reported will turn into cash flows?
We'll know our answers soon. Thanks so much for joining in, sir. For the time being, slip into a short break. Come back, continue our focus on markets.